Well, good afternoon, everybody, or good evening, wherever you may be. Uh, nice Wednesday afternoon here in California. In this session today, I'm going to be talking about end of day strategies that use the tools we already have in our AIQ Trading Expert Pro. For those of you who don't know me, I'm Steve Hill, CEO of AIQ Systems, and we've been doing the Trading Expert Pro, I think, for about 30 years now, and still going strong. And this particular session will dig into both group sector, a little bit of expert ratings, using some of the old AIQ reports as well as a sort of a key off or a jumping off point for these strategies. So these strategies were just something, a little bit of research based around the current marketplace where it's really algorithm driven. When you have that sort of AI input too, I mean, we can't beat those guys, but what we can do is try to ride the coattails and maybe catch the second wave of a change in direction or a continuation in a pattern. So these three strategies, nothing super rocket scientist, but pretty pretty good combination. And we'll see some examples because I've run the reports on this for last week, so we can see how it pans out in the last couple of days at least. Session's being recorded, by the way, so you'll have all this to go back to if you're interested in finding out at your own leisure what I'm doing here. So number one, this is false breakout strategy. So as I mentioned, that algorithm driven, you get those, prices break out intraday through a primary or sort of tertiary resistance level. It's programmed in, it sets off some sort of automated system, and what can happen is that then fails, prices drop back down below that breakout. And what we want to do is just get ready for the second breakout when it actually really does break out. So spot it by price breaks a clear support resistance. In this case, we're just going long. This happens intraday. We're not going to look at it intraday. We can just see from the price bar of the end of day data that the intraday price action was above the resistance level. And then it has to come back down and close near the prior day's range at the end of the day. So it sort of failed a little bit. We want this to happen with a decent amount of volume. So we'll key off of the volume spike report from our report areas, and we will buy the next day if the price moves above the breakout. So in this case, remember, we've had a pullback from that breakout intraday, and it's closed back to close to where it was the previous day. But then next day, it's going to be above the breakout and moving on again. If it doesn't do that, then we're not interested. So that's the first strategy. And we'll come back and refer to this as we're going through some of the reports as this is happening. The second one, we've got a sector rotation momentum pullback. Again, money flows, ETFs that have to cover particular sectors or segments in the market. In this case, we'll try to find groups. We won't go to the sector level, but we'll already go down into the group level. We'll find groups that are in a good trend, but they're also kind of hot, so they're heating up, so they're accelerating a little bit. Identify the leading stocks or stock within that particular group. And we want the ESA, the 20-day ESA, to be rising, and want the price action to move back towards that. Doesn't actually have to hit it. And then enter on a bullish candlestick. So that could be the next day, but more likely it's going to be a couple of days later. Then you would see kind of a slow pullback from that first sort of breakout or the first sort of move up or the continuation of a move up. We're not particularly interested in what it did that first time. We just want it to be in a trend. It's going to be a leading stock within a group, and then we'll look for it to be above that rising 20-day ESA, almost trying to pull back to it before it leaps off again. So that's the second one. And the third one, which is back to looking at volume, we'll look at a volume trend report to get a volume surge. That'll be our key off point. We'll look for a large range reversal candle. So we've had red candles, and then we'll get a green candle that's pretty large, could be engulfing the previous day. This one's a little less common in happening, but The key thing that's sort of only AIQ centric in here, you won't get elsewhere, of course, is the expert rating. So what we're looking for is a surge in volume, and we'll use volume trend this time because we want it over a period of time. It's going to be above its moving average. We next morning will get in on the confirmation of direction if it's moving in the direction we want it to do. And we'll use the expert rating. We'll just look back and see if there's a buy rating, because these are all going to be long strategies. If there's a buy rating, if there isn't, fine. If there is a sell rating, then we reject it. If the buy rating is a couple of weeks back, we'll consider that as a small positive confirmation. The closer the rating is to the actual event, the better. That's the PowerPoint. I'm going to leave that up there and just go back here to the first slide. So the false breakout, to say a volume spike report is our starting off point. So remember, so this one, it's a spike in price action, and this has happened usually around about a resistance level. So it's blown through that intraday and then fallen back a little bit. And we want to really get in and get off on this when it continues that breakout. So let's look at this. We'll start off with the reports. I generated reports for Friday. So we got Monday and Tuesday's price action to see how this pans out. So I'm going to flip over to the reports themselves. It's probably going to be easier if I just bring this up. So, if you're not familiar, just real quick, of course, in the AIQ main menu, reports are generated every night. And this icon here gets that generated for you. As you can see, as I mentioned, June 13th, that's our key off point right here. Stock reports is what we're looking for. And in this case, we're doing a volume spike. So all of these stocks have had a volume spike on June the 13th. So I can show you what that means as far as settings are concerned. The percentage floor is 100%. And the moving average period is 21. So what that means is that today, or in this case, the 13th, the volume on that day is double 100% above the average volume. So it's definitely a volume spike for that day. These are all the stocks, and this is actually generated on the S&P 500. So that's all the stocks we're looking at here. You could have a wider universe if you're looking for some more lower cap or some other technology stocks that might not be in the S&P 500. In this case, we've got all of these stocks had a volume spike on the Friday, and the information itself, the report ranks with the ones got the greatest spike, like Oracle at the top here. What I've done, and what you can do, is you build a report list, which makes a list of all of these stocks in that chronological order and frozen into charts. I've already done that to save you a little bit of time here, or save us time. And I called this because this is the best for 2025. And this is the best 2025-1 is the name of the report. So here, Oracle, you can see it's the top stock within the report itself. And we've just gone down as far as AXP. So I'm going to go back to this report here. It's just the top stocks that are in there for us to go look at. So key off point here is on the 13th is what we're looking for. We're looking for that volume spike. You can see the volume spike down here. It's a pretty significant spike itself. In fact, the previous day had a pretty good spike as well. But we're looking for it to have broken out of a significant resistance level or a recent significant, something we can see, right? Would have to have broken out on the 13th and then fallen back close to, or actually at, in this case, the previous bar. So that kind of, that looks like it, but it's not really a breakout of a significant resistance level, because it kind of broke out on the day before, right? On 6/12, it's really broken out of this level here pretty well. I mean, if you could call that a significant resistance, it's not particularly, but it is a resistance level. So really, we're kind of late on this one. And besides, after that, we didn't get any sort of follow through on the day afterwards. We want this to continue after it's done its whole day breakout and pulled back close to or even inside the breakout. So this one doesn't count for us. So we're going to quickly go down through some of these in here. Since we're going long, we're not interested in this, right? We're really not interested in things going down particularly. This particular strategy requires us to have had a breakthrough, a resistance level. This is a resistance level. This is not anywhere near it, so that would be rejected. I'll just go down to save ourselves some time to some that we looked at earlier. CF Industries here was looked quite similar to Oracle, really. There's a couple of resistance levels. This is a real resistance level right here. In fact, if we go back in time, we can see this is a pretty good one. This is the date of the report. The actual intraday prices blew up here, and then it came back down to this area here. And it's not that close, though, to the previous day's bar. But it's a pretty good looking one, and prices did open up the next day. So that would kind of meet the criteria for us to go long on that particular stock. So criteria again, quick reminder so we know what we're doing here. I have to remind myself too. So the PowerPoint itself is here. Price rise above a clear support resistance level intraday, closes back near the prior day. Volume spike is our start off point, has to move above the breakout the next day, which in this case, of course, we're way up here anyway, move back to here. So this is the resistance level. It's right at it, just inside it. Next day it breaks out, it's moved up. So you would consider that meeting the criteria for this strategy. Here's another one here. This is, look at the date again. Remember that we're doing this on the 13th. Here, the price action broke through this level here quite clearly. This is not hugely major level, but actually this is a better level. There's some definite resistance level up here. It actually touched and went through that level too, and then fell back. I mean, it fell all the way back. That's classic. That's what we're looking for. The volume spike's more difficult to see because there's this huge volume here, but that is definitely a double volume day. And so if it moves up the next day, you move into the stock. That's how this strategy works. So that's not, that's a pretty good breakout since 1, 2, 3 areas here provided some resistance. So it blew through this one real quick, and then it got up all the way up to here, hit that, and then gave up and came back down. So you've got to be down here at the close of the day wondering if it was a failure, but as soon as it opened the next morning, you're ready to go into the position. This one I like. The setup on this looks great, right? So here's the spike, right? We want the spike. We've got the spike itself. The actual day at 6:13 is here. Very different as far as the breakout is concerned. It broke out and stayed up here, but never really pulled back anywhere near, didn't close anywhere near this price bar here. As you can see, we don't have a continuation of that the next day as a red bar. It didn't keep moving up, but it didn't reach the criteria coming back. It broke through this little resistance level here, and then came back the next day and started to mess with it. But that's not what we were looking for. So that one would get rejected. Here's another one here. This one, similar type of thing here. Remember, we're looking at 6:13. The problem with this one is it never quite reached the level, right? Never quite did it. So that one's immediately rejected because we want it to cut through the level and then close back down. This one, again, similar type of price pattern. Look, 6:13, it blew all the way through it, but it never closed back down to get us close to that previous day's action. So that one would be rejected as well. This one, 6:13 is, 6:13 is great, but we're already, we broke out over here. So it doesn't meet the criteria. This one here has a sort of a resistance level here. It broke out on 6:13, went all the way up, never really closed back down towards this level either. And the next day, it didn't open up or trend up, so we moved on from that one. This one again, 6:13 was too late. This already broke out of this level here. This one's going down, no, not interested. Here's another one like this. So there's quite a few that look like this. This ConocoPhillips. Look at this date here, 6:13 again. It blew through this resistance level, but didn't come back down. It was closed up here, so not interested. I'll just go through a few more in here. Previously I went through and had a look at these, and I don't think there was maybe one more. This one, I think, yeah. So on this one here, it actually broke out on days before. 613 were too late, right? This happened back here. I like this one because trend line. I like this one because while this is the date we ran the report, we could have run the report back here and probably would have had this as a breakout if the volume had been good enough. But again, the volume was the spike that gives us the key of the action, but this is already broken out of a resistance level. I did a class earlier on this with some UK folks. Was this a resistance level? Yeah, it kind of was, but it never really got back up to that level here. So that one would have been rejected as well. This one, again, we missed all that. Price actions moved along. This one here, ExxonMobil. So here is 612, sorry, 613 right here. This one, again, is blown all the way through this resistance here, but never really pulled back. But in this case, you know, things did move up, but we would have still have rejected it. This body needed to be longer and go back down to below or close to that previous day's price action. And this was another one here. This one's 613. It blew through. This is not a great chart. There's a line here. This is the previous high. It actually blew through that quite nicely and then fell all the way back again closer. This is a good one. But this is what we want. It shot through, looks like intraday, you know, because the body itself is the intraday price, has that intraday price action. The high is the top bit here. So it blew through this high, but closed back down here. We know that's the close area because that's a green bar. So it's headed back towards, it's looked like a failure, right? But next day it starts to move out. That's what we're looking for. The volume spike, again, gives us the key in because it has a significant amount of volume. So that one's a good candidate based upon that. Now, I think that's all we had in that one. So again, you can run this. Let's recap this real quick before we move on. This is a volume spike report. It's the false breakout strategy. Intraday, that price bar, it's going to be a green one. Obviously, we're going on, it's going to be a green candle. So the body breaks through. The high will be above the breakout area. That's happened intraday, but it closed back down inside the breakout point. It closed back down inside the breakout point. Next day, it's back above it. That's when you get in. So you missed the first bit for good reason because this was a sort of a fake breakout. The second one, the sector rotation momentum, is up. Now, what we're looking at here is groups. So I want groups in a good trend that are accelerating. We can find that. We have the report we'll see in a moment. Going to look at the stocks within the group and see what those stocks are doing. Leaders, laggards, going nowhere. We want the leaders, and we want to buy the pullback. So it's slightly different, but it is, in a case like this, we want a bullish candlestick, which of course we'll see that when we look at an example, when we get in the next day. So let's check this out, what this looks like. So you're buying into a group basically that's in a trend, it's accelerating, and you're riding up on the leading or one of the leading stocks after it's had a small pullback a couple of days. So what we'll do is we'll use the group reports for this one. Go straight to group analysis itself. So groups themselves, this is the S&P 500 groups. They are ranked based upon a trend score calculation. The one with the highest 100 is in the strongest trend up. The one with minus a 100 down the bottom, which is retail apparel, I believe. Yep, it is minus 100. And the positions in between are sort of the higher they are, 90 or greater is a pretty good trend up. I mean, that trend is based upon several indicators, including up, down, the MACD oscillator, the directional movement indicator, money flow oscillator are all used in the calculation of that trend. So what we want is a good trend. Remember, we want hot groups, but we're going to pick hot groups that are accelerating, and we use the DTS, the Delta Trend Score, to find groups that are already in a high trend but are accelerating. The higher this number is, the more it's moved up in the report from the previous day. So, for example, tobacco here has a 95 trend score and a Delta trend score of 31. So that's a pretty good one to look at. We have another one down here, the healthcare distributors. 93 with an 8, not as good as the tobacco, which seems to be flying. And then what else do we have down here? There's several others, but even things like interactive home entertainment is good. So let's just start with the tobacco one, because this is a good stock. Oh, it's a good group. So I didn't build a list for this because I'm just going to look at the group itself. So when I click that, it brings up the group. I need to change my list to the S&P 500 because remember, this is the list of the volume spike breakout one we were looking at, or the failed breakout one we looked at a moment ago. So I switched to the S&P 500 so you can see that my exploration will change. And this is tobacco group. So we're keying off here of a group that's in a good trend, that has a accelerated trend. So what's happened here, the trend's been pretty good overall, and it's started to pick up again over here. What we're looking for is the stocks within this group, and there's only 2 that are in there, to be doing that same sort of thing. So let's remind ourselves what it is that we're looking for here. We're looking for a good trend score and a good delta trend score. We did that, so they're sectors that are heating up, or groups in this case. A leading stock pulling back to a rising 20-day ESA. So I have put that on there already. Let me make sure we have that. Let's get rid of the 10. We don't want the 10. There's the 20-day ESA. And actually, the tobacco group itself is even exhibiting a rising 20-day ESA and the pullback, right? I mean, we ran this on the 13th. So we want the pullback and then to buy on a bullish or on what is a green candlestick. Nothing exciting. Doesn't have to be engulfing, doesn't have to be huge. It just has to be a green candle. So only 2 stocks, I imagine. So here's a Philip Morris or Altria. Philip Morris is here actually. MO. It always confuses me. So Altria look at the ESA, it's going down, right? Price actions drop down below that. Doesn't look like that's the leader in the group, even though there's only 2 stocks. But if we look at Philip Morris, so we rejected this one straight away. But Philip Morris is a classic. So remember what we're looking for: leading group, accelerating, leading stock. Obviously, Philip Morris is the leading stock, generated on 613 right here. ESA, 20-day ESA is going up. We watch this until we get this bar. And that's when, okay, we've got a green bar, we'd enter the next day. That's what we look for. So we're looking for the ESA to be going up, price action to be moving back down towards the ESA, green bar to get into the position. Simple as that. And that's what the strategy calls for. So that's a pretty good one there. Philip Morris has, because we've got the characteristics in the group, it's the leader in the group versus Altria, which is definitely not the leader, right? And it looks like it had its day back here and has fallen away since that time. So good one in Philip Morris right here. So that's one group. Let's go look at another one, back into those reports. So we said tobacco was looking pretty good. And the next one I was going to look at was, here we go, healthcare distributors, 93 trend, pretty good trend. Delta's trend score is 8, 5 stocks within the group. So double click on that one. So now we're in the healthcare distributors. So again, this has got a pretty good trend in place. It's really moving quite nicely up. It's been wobbling along that 20-day ESA pretty nicely at the group level. What we're looking for is inside the group itself. We're looking to see what's happening with the stock components. We don't want the laggards. We don't want the sideways guys. We want the leaders. So I can click and go down, or use my arrows to go down. This takes me down inside into the first stock in the group, and then I can move left or right, or I can just click over here. So Bristol Myers Squibb, definitely not a leader in the group. ESA is going down. We're completely rejecting that one. I mean, that's completely not reflecting what the group's doing. Typically in groups, you've got leaders and laggards and all the rest in the middle. Second one, Cardinal Health. So here's a great example right here. Cardinal Health. We know we're in a great group, right? 613 here is when we would have run this report. ESA is still going up. The only thing this doesn't display is it only kept going. It didn't really pull back towards the ESA. It's just kept on going up. you could break the rules and say, hey, well, it was kind of flat here on the next day. Maybe I would go in on the next day after that because it was a green bar. But it didn't have the pullback to the ESA that we're looking for. We're looking for this pullback so we can accelerate, buy off the acceleration from there. So it could be late on this. You get in here or here, and it pulls back to the ESA, then you get in. So maybe that one's one we'd have to reject. Good looking stock though. Next one, so this is the same in the middle, Henry Schein Incorporated, going absolutely gangbusters sideways. I mean, look at that ESA. So we've seen a leader and a laggard, and now we've got the one in the middle. So that one probably be rejected. So next day, 16 Monday, it pulled back. You would wait for this bar Tuesday. It's a solid green, so you get in today on the 18th. That's what it looks for. So you're looking for the group, and it's going up. It's accelerating. We've got a leading stock in here. We can see Maxis and AIQ is definitely a leading stock. Meets the criteria here. We've got the ESA still going up, and it's pulled back towards it. Perfect. So that's a perfect candidate for us in that strategy. Last stock in here, guess what? Not interested. It's going down. ESA is going down. Doesn't meet the criteria. We'll look at one more group in here before we switch over to the last strategy. So again, we're looking for these high trends with the delta trend. So it's accelerating. This one's quite good here. Interactive home entertainment only has 2 stocks in it though, but that's pretty good on the delta trend score. This one up here, oil and gas equipment. I missed this. Here we go. Look at this. Oil and gas equipment and services. High trend score, great delta trend score, 4 stocks. So here's the key takeaway from this. This is an uptrend in place here, right? So this is what we're looking at. Here's the uptrend. Here's the accelerated uptrend. So that's why you get this appearing in the report near the top, and it's got a high delta trend score. It's looking great. And what a great looking group chart that is, because there's plenty of room in group level up here, right, for a growth. So let's go down. Actually, 4 stocks. This one's no longer in there. First stock in here. So again, remember what we're looking for. We want the leaders. We want the leaders. So this is the group. The group's looking like this. The first stock in here is Baker Hughes. Not looking too bad, right? I mean, on the 13th, when we had the signal, which was right here, the 20-day ESA is going up, but you wouldn't have done, there's a little bit of a pullback here towards the ESA itself before you possibly would have gone in on today, because this is the day when you saw the green bar. It's not a bad candidate. It's not as clear as we saw with Philip Morris, for example. Next one, Equitable Resources, another interesting stock here. 613, right? This thing just blew off and it's just gone. I mean, it's broken out from all of these levels here. There's nothing stopping it. This is almost like a candidate for the first strategy, right? It's kind of broken through. It almost failed. It broke through actually on 616 on Monday, went all the way up and then came all the way back to this sort of support level. So this might have been a candidate if we ran this for that volume spike one, the strategy number 1. Problem here again is even though the ESA is going up, we've never had a pullback. So, if you're going to stick to your rules, that one would not meet the criteria. We want the pullback because we want to benefit from the bounce off the pullback. And this is like this, you want to benefit from this. We don't want to buy in here, but then it falls back again. So ESA going up, so we might have to reject that one too. Halliburton's a bit of a, this looks more like the group itself. Again, we've got 613 as the day this report was run. It's up here, but it's already kind of far away from that ESA, and really we haven't had a green bar yet. If this pulled back over the next few days, it might be a good candidate. Very similar here on this particular one, Schlumberger. You've got the actual bar here. ESA is moving up. It's moved back a little bit, possibly. Yeah, this is good. It's not the leading leader of the group, But again, we've got this potential for a breakout up here. So if the next green bar is up around this level, this might be a good one to look at. So a reminder on this strategy again. So what we're looking for, volume's less important to us on this because we're playing into the group sector. Heating up the groups, in fact, in this case, leading stocks, pulling back to the rising 20-day ESA. We just saw all that. Enter on a bullish candle, we wait for the green candle to get in. Best candidate we saw there, of course, was that moving back towards that Philip Morris in that tobacco group. Looked a great candidate. The stock was really, really strong. That's number two. And again, you notice these strategies are all about trying to get in the second leg. I mean, it's really quick sometimes, but we're never going to get in the first leg of a move. And it's always about a breakout or a strong group in this case. The third strategy, of course, that we're looking at today, this one's a little unique because it's got a expert rating, an AIQ expert rating component to it, adds a sort of a different level of confirmation. In this case, we'll key off of the volume trend report. Volume spike is 1 day above the 21-day average. Volume trend report is over a sustained or an extra number of days. It's usually 4 or 5-day look back period. Has to be above it. So we've got a trend in volume in place, an unusual surge, basically. Expert rating is our final look back to see if there is one or isn't one in place. If there isn't one, fine. If there is one, we want it in the direction we're going. And again, these are all long trades we're looking at here. Trade the next morning on confirmation of direction. It's got to be going the way we want. So let's go have a look at what we have in the reporting area for this. So close out those group reports. We'll go down to the volume trend report itself. So not a huge number of stocks in here. So let's see what sort of candidates we can find. Again, this is percentage above as far as the volume is concerned during that period. I think I said the settings was 5, but I think it may be averaged over 5. Yeah, it's over 5. So it has to be 100% above the average over a 5-day period. So 100% above the 21-day average over a 5-day period. There's our trending up volume in place. And we'll key off of that. Again, we're going to be looking for nothing more than we've got the volume in place. So I go back to this all the time. We've got the volume in place. We look for a large candle, a candle or at least a reversal candle to indicate that prices are suddenly moving up. So would have been a red candle turns into a green candle. It doesn't give a real size of the candle, but you can tell when you get this happening. Trade the next day on confirmation of direction. Is it actually going the direction we want it to go? So these stocks, I've already blasted this into a list, and we call this one. This one is, he pops into charts here, and this one is called volume trend. So notice now we have the stocks that we just saw in the report there. Let's get rid of Schlumberger. So a reminder of what we're after here, be this ESA 20. And so you can see here the volume. This is the key thing. There's some sort of trend happening in the volume. Happening probably was a blowout here, the final end of a move down that brought this into action. The report was run on the 13th, right? So what we're looking for again is we've got the volume in place. We've got the rule 5 simply because of that volume itself. What we want, we can't act until there is a big solid candle. And this is the one here. This is the sort of thing we're looking for, this type of candle. It's a much bigger candle. So that's pretty much confirmation from we've got the volume in place. We've got a big candle on this day, which was actually last night's close. The final piece of the puzzle is look back at expert rating. And this one's going to be disappointing or not. So here it is. This is really good. So what do we have here? I clicked on the ER button. We have a buy signal back over here. So what's happened is we've got a situation where the expert rating is good. We've had the volume trend is in place. And the next 2 days, in fact, it was yesterday, we get a good size candle. So that's a good candidate. The very first one in there met the criteria for us. We don't care too much about the ESA in this case. This is a little bit more not bottom fishing, but it's a little different strategy that doesn't require us to use the ESA. Next stock in here. Remember, volume's the key off. It's the trend. It's not just one spike day. Blowout here again on this stock. Problem with this one, of course, is that there's no green bar. It happened. Looks like we still have final shakeout happening at the bottom here. Well, that's a different strategy, right? What do I look for? I'm going to see if there's an ER. So we haven't had a confirmation on a solid green bar after the 13th, and the last rating was down. So we're looking for long candidates. This one gets rejected straight away. Oracle, weren't we looking at Oracle in one of the other reports? We were. Yeah, so Oracle, so this one appears in here because the volume continued over a couple of days, and we had this sort of breakout anyway. The problem with this, again, of course, is that we've had the breakout here. There's no solid bar after the breakout. If we had one of these big candles a few days later, this might meet the criteria for this strategy where we're looking for a volume trend, and we're also looking for an ER. A scatter back for an ER. The last one was a sell signal back here. There's nothing in place at the moment, but again, it's not a great looking candidate for this strategy. So again, this one here, 613. Excuse me. Again, it could be, there's several days of volume here with a pretty high. Remember, it's an average, the volume. So you can get one spike day that can drift the whole thing above that average. This one again here, we've got the volume in place. We don't have a big bar. It's really a small bar at the moment. So this one is kind of rejected anyway for the moment. Moving on to the next one. Again, 613. Lots of volume happening. No green bar for us. I won't even look for an expert rating because we don't have a green bar in place. This one, 613. Lots of volume, mostly from this volume spike here. There's the big bar. So that would be a good entry point as far as meeting that criteria. We've got the volume trend in place for a number of days. We've got the big buy bar on Tuesday. Do we have an expert rating to go with it? Well, it's fairly back here, 96 buy, pretty good rating, right? Don't care about what the rules say in there. It just needs to be 95 or greater. But it's a pretty good candidate too. So it met the criteria, volume trend, although most of it was dominated by one spike. We had the actual rule firing on this day, or the report this day. Next day was the big bar, so you buy in over here. But it's not a bad candidate. Warner Brothers, of course, well, we know what's going on with it. Warner Brothers Discovery. So moving on, this one looks pretty broken. Yeah, that one's not going anywhere. Gone down and down. I mean, we're too early in this one. Remember, all we care about, the volume is dictating where we're keying off from here. Expert rating, again, we haven't had a solid green bar to tell us this is a candidate to get back in. There was a buy signal back here. Looks a little early, looks way early. But no, not a great looking candidate. This one here, 613 again, volume. A lot of it was volume spiked on this one day, so 6.9. So we know why that was. And the same thing happened here. We've got, it's gone. 613 was here. This is not a big candle. We reject that one without even looking at the expert rating on it. Same one here. What have we got here? 613. Not a lot happened. Big volume again. Kind of move sideways. Without that big candle, I'm not interested. I need a big green candle for the key off point to make this work. 613 here. Modest sized candle right there. That's a possible candidate regardless of what happened the next day. This is, one look worth looking at. Let's fire the old expert rating, see what it says. But there's a down rating back here, so we'd reject that. If the rating's more than 3 weeks or so back, I don't really think it has any relevance for our current analysis. But if it's closer than that, then it definitely has some a bearing on what's going on today. So, this one again, here's another one, 613. Haven't had a bar in there yet. Everything's going down, so it's probably early on that one. Intel, of course, 613. Got a solid bar here. It's still not quite the right size. And expert rating wise, last rating was a down signal back here, so that one will be rejected as well. Down here we've got 613. Remember, this is the key off point. This is the volume was mostly around this one spike here. It was on this long bar. Look at that bar, right? This is, this candidate's gone all the way down. It's hit a bottom here. This is not a big enough bar for us to say this is our buy point on 617. Expert rating, we have a buy signal, so that's pretty good. This one's good candidate to hang around. If we get another big bar, a big solid bar the next day, this would be today. It's trading, this would be a good one to look at. So I just want to tag into a list because it's pretty much exhausted itself down here, and it's a good chance it might try and test the bottom before it jumps off there again. So it's got the rating, got the volume bit, and we don't yet have a big green bar for us to key off of. Same with this one, nothing happening much on that one. We'll skip past that. $6.13 here. And not a lot happened the next day, went down. There's a pretty good solid green bar there, actually. I wonder what the rating says. No, we're on a sell, so we'd immediately reject that one. That's got some bad data, needs fixing. This was a board warner. So look at these, the latest stock trades is really interesting. We've got some doji stars flying around in here. 613 was the day of the actual, when it fired. You can't see the volume quite so easily because it's giant volume day. Again, we don't have a big green bar. We don't have anything to say it's going to key off from there. And the expert rating is a sell signal back here, so we'd immediately reject. You can see how this doesn't take too long to run these type of strategies. This one again, there's no bar here. We'll move on. This one's, again, just two solid red bars down, doesn't really count for us. This one's 613, and then nothing happening. I need that green bar. So this is what you really need. You need this. You need this bar in place. So this is not a bad candidate. The fact that we haven't come all the way down to the bottom is a little worrying, but there's a solid green bar here from a buy-off point if we have an expert rating in the last couple of weeks that confirms it's a buy, and it is. So that's another one that's a good candidate. We've got the volume. We've got the big green bar. We've got a buy signal, 618 today. That's not a bad candidate. Universal Health Services. So check that one out. Go through a couple more and then have a quick question and answer. This one, 613, nothing's happened on that one. Brown Foreman, and a nasty gap down. 613, nothing happening here. Remember, no green bar, no go, right? 613 here, guess what? It's Apache. We have that one of the other lists. In the other strategy, Apache here. So this one fired 613. Two red bars here, nothing happening for that. So there's a couple of stocks in there where we had the rating right. And not only do we have the rating, we have the volume. Of course, we're keying off the volume trend. So we've got both of those in place. And again, we're looking for that green, good size, green, bullish candlestick. When that happens, then you get in the next day. So recap on those strategies for you real quick. These three strategies. The one we just did, reversal candle at end of day. I mean, it's a large range reversal. I'm really just looking for just a solid green candle. It doesn't have to be a complete and utter engulfing again, or it doesn't have to be a complete reversal. It could be the previous day was a very small green one. We need to be a bit flexible on that. Volume surge is done by a volume trend, and we want the expert rating within a couple of weeks, really, to be in the direction that we're going, or have no expert rating within the last couple of weeks. Although it's better to have a rating, and when it's close, like we saw with those two candidates, is pretty good. Trade the next morning on confirmation of direction, i.e., next morning it's got to be sort of going up or up from where it was the previous day. So that one's, not a bad strategy. The sector rotation, momentum one was pretty good. We saw that pullback on that Philip Morris, what a classic example that was. That's a pretty good one. Look at 3 or so groups that have high trend scores with good-looking delta trend scores. First strategy, false breakout one, like this one too. A clear support resistance. I mean, define your resistance level. Is it the last month, the last 2 months? We're doing an end of day strategy. Anything beyond about 2 or 3 months is kind of getting out of our I would say ballpark. So this is a great strategy because it pops up and then it comes back down, and then we wait for it to go up again before we get in, keying off of the volume spike report. So that's it, folks. We are done with our 45 minutes. Bang on 45 minutes. Probably tell I've already did this one today already. That's how I can get it all done in 45 minutes. So great 3 strategies there. A recording will be made available for you. If you got some questions, fire them into the chat here, or just drop an email to support@AIQsystems.com, and we'll be able to answer them for you. And we'll have this recording up on the server probably tomorrow morning, I guess. And then we'll send the link out because everybody registered. You get 45 people registered. Not everybody can turn up. It's that time of day, right? We finished the trading day. If you're on the East Coast, you're thinking about supper. If you're on the West Coast here, it's like middle of the afternoon, and we're kind of consolidating the end of the day. Great. Any questions, pop them in there. If not, as I say, you can email support@AIQsystems.com, and I will send all of you the recording of this session. But I particularly like this, the one I like the best. I like this false breakout. It's pretty good. Even though that sector one with Philip Morris was nice, I mean, it really fits the rule very nicely. This one clearly has, a fake out that happens when, systems fire. It breaks out of a previous resistance level. Things get fired, but things fall back. And so we're trying to take out when it goes through a second time. And I think that's a legitimate strategy. Okay, folks, have a great day. I will talk to you soon.